Look, we need to talk about this right here. I'm going to jump right into it. We need to talk about this area right here. We talked about this roughly on Friday, but we need to discuss why this area here on the Nasdaq is so big and why this could be one of the most profitable weeks maybe of the summer. Now, as we go into SPY, you're gonna have some of the same movement as well as you zoom in here. We're using the 1 hour time frame, but as you can see, this is gonna be the same equivalent area, and SPY is lagging behind a little bit, if you will. It's basically from about 417 all the way up to around 427. You can see these areas come back. They're very illiquid. You shoot straight up, you shoot right back down. Going back to Nasdaq, what happens here? You can come back and you can see the same area. We marked it out once again on Friday. You shoot straight up, you come back down. Now, before we get into any more content, before we talk about specific stocks, anything like that, I need to ask you to consider doing two things: liking and subscribing. Every single day, I'm giving you the videos on the market, what I see happening, and overall news points you need to watch out for each week so you're not surprised and you know exactly how to make money. Now, you might see my thumbnails might be a little bit clickbaity, if you will, but when you come to the channel, you're going to get an unbiased opinion 10 out of 10 times. Let's get back to it. Now, what I want to talk about really quick is the economic calendar for the week. The past few weeks, we've had a lot going on. A little bit of a different scenario this week. Going into Monday, not too much. You're going to have your PMI data coming out this week, but it's already been stated basically from the Fed that they don't look too much at PMI and CPI, which I would agree that those are very big indicators of inflation. However, the Fed is saying PCE is the most important, and they expect GDP growth. That's what they've been telling us. Now, from a long-term perspective, I still think there's major issues, and I don't think inflation in this recession issue has been solved. We'll talk more about that here on the channel as well, but I want to cover this really quick. The biggest things that I think we need to be looking at for this week are going to be the job openings, unemployment changes. You do have Bullard speaking. I believe this is Wednesday. That's going to be very big as well. This is Tuesday, I'm sorry. So Tuesday of Bullard speaking. That's going to be pretty interesting. That's going to be on the after hours, it's looking like as well. After that, the major things again is going to be not too much else when it comes to PMI. I'm not looking too much at that. I'm looking more at employment numbers because based on what the Fed is telling us, employment is numero uno and going to be the most important thing, which we're going to talk about here in a second as well. Now, we come back in here, looking at this area. My stance on the market right now is pretty simple. If you open up above, let me just make this key level for you very quickly. If you open up above this level, in my opinion, I believe you have upside. And also, too, let me know if you like the gray and black and white chart. I just like this chart. It's a lot more clean for myself. I can change it back if you guys want, but this is what I've been using in my personal time right now. But I like this movement up to the upside. It looks very good. So what am I looking for? If we start to get any type of opening by the time futures open above this level, I'm anticipating very volatile movement back towards that upside. Now, there's a lot of stocks that I like here as well, which I'm going to break down here in a second. But looking at Nasdaq, it definitely looks set up for that. Now, the only thing that has me a little bit on the edge of my seat is coming back towards SPY. Because when we look at SPY, and I like using SPY because it just gives everyone a better visual because I know so many traders are looking at this. ES is a better perspective to look at, but SPY is going to give you just a better visual because so many of you are trading this, right? And so SPY, you still have a little bit of range until you get that breakout. In my opinion, this is your breakout range about right here. So you need to get above 417 roughly. I mean, you still have, almost $5 to get there. You still have a little bit of range. Now, when we get to ES, you can also see this area playing out right now, and you're getting very close to that range as well. Let me actually move that back. Sorry, I didn't mean to grab that. We're going to go right back. But you can see this is a lot more interesting. So in my opinion, when we come to ES, you have to point that level all the way up to almost right here. And this is your key range. You have to be targeting around 4,300, which you can see that's a lot of upside, right? But you're still lagging this level, and you can see this range goes all the way up to here. But our key range we've been watching is where you were kind of testing was about 4150. Now you get about 4150, I think you're going to get some volatility, but there's a few ranges in here that you have to watch for, which I think line up perfectly with SPY as well. That top range around 4200, and then if you get about 4200 on ES, which is S&P futures, you're probably testing that 4280 range in a hurry on ES. So these are areas that I'm really looking at. Now, I want to point out some of the visuals we watched to get to this level and things that I'm going to be watching as we play out on this week. Now, people keep asking me, well, what's the bear case? And I do want to point out that there is quote unquote a bear case. If you start to get rejected at these levels on Nasdaq and on ES, where are we watching? Where are we looking for a retest? I think you have to look for a retest back into this zone down here where we had our ultimate breakout, really, which is at about 4,030, give or take on ES. So coming back down. Now you can see as well, look at how we moved in this range. You can see we quickly moved from 40.30 all the way 100 points on ES, which is no easy task to say the least, in a matter of a day, really about a day and 2 hours roughly to get to that level. When we go to NQ, in my opinion, NQ moved a little bit slower if we're really looking at how these charts played out. ES finally got that breakout because we've been talking about how SPY had been lagging. So if I'm looking at an area here on NQ, my retracement level, I think you have to be looking more for about a 12.7 to 12.75 region to get your retest. So this would be your ultimate support, in my opinion, coming back down to this level. I already have an alert set for there. But this is really what I'm going to be watching. So I want to get rid of that top zone just so you can see this a little bit more clearly. You need to hold this to remain bullish. So let's say hypothetically tonight we come out, we have futures open up, and you start, getting a little bit of a push to the downside. If you bounce in this area and you see buyers start to step in around this area, around 12.7, 12.75, that is almost, I don't want to say more bullish than getting a direct breakthrough to the upside, but it shows you the strength of the overall market right now. Now, again, I understand people are going to be listening and be like, Tyler, you're saying the strength of the market. You're saying, the market looks bullish, this and that. This is for a day trader's perspective. You need to understand that. A long-term perspective, I still see the downside. I'm not looking at buying long-term stock yet. I'm not looking at grabbing swings. This is for this week. This is how I'm opening my trading into this week, okay? So we're not looking at long-dated positions. We're looking at short-dated because ultimately you're coming back in for a day trader's perspective when you're stepping in here. Everyone knows my long-term stance here. Now, coming out from this, I want to look at something like junk bonds and showing you what's happening here, which we have been covering. Junk bonds have been one of the biggest indicators, one of the biggest leading indicators to getting a big bounce in the market. Now, the last time we saw a move like this from junk bonds, and this is very steady, is pretty much back in May. Back in May, we saw more of a straight shot, that clean breakout right there. Here, we definitely saw more of a longer progression, if you will. You really held this trend to the downside. You broke out to the downside a few times as well. If you really come back down in here, I don't have the bottom of this range marked out right now, and it's definitely clouded by a lot of this here. But you can see that you held this for a lot longer. This was a 1, 2, 3, 4, 5 week period in which you were trending here, and this period back here was about a week and a half. So there is a difference here. But look at how well this is established. You can see it just established for almost over 2 weeks to the upside. Previously, we had about 4 days of upside in the stagnation. So you're definitely see a risk-on approach being established here. And we do see junk bonds coming back up to the range of 98 to 99. That's our target here. So we definitely have more risk on the market, in my opinion, for this week. And so these are the areas that I'm going to be watching, is that push up to 98.5 to 99 on junk bonds. You can also see when it comes to the dollar index of where the dollar index is pushing. Now, I've had this zone marked out for weeks, roughly, like 2-3 weeks, roughly. And these are your previous highs on the dollar. Now, I want to highlight that there is multiple ranges here. So you have your previous highs that you just made, and then you have this previous high right here. So this lines back in what I was talking about with a member from Discord. We were talking about Bone Thug, and he's very big on this level, and he's really watching for this level at the monthly, which is totally possible. Typically, monthlies get retested. The last time he tested this was about a day from the open, so you don't know if you can really consider that, but you saw the monthly tested here roughly a week and a half after. So that's more of what you want to see. You can see the monthly established and tested right there as well. So we are looking for that monthly touch. So there's 2 key areas I'm watching here on DXY, about 105.5, and then down to about 104.8, all the way to this high of like 104.9. Now, also too, forgot to mention, One more thing, if you are interested, the link to the free group, this is our free group on Facebook. We're posting every day. I'm posting breaking news. We're talking, conversing with traders, the community here. Absolutely free there. Check it out. It's on Facebook. Link is down below. I don't know how much longer I'm going to leave it live, but make sure you join that while you can. And you can converse and we can talk about what's happening every single day. I'm usually talking during market hours as well, so check that out. But looking at DXY, this is a very crucial moment as well as to how you respond to this area. Now, even though you are dropping on DXY and your dollar index is dropping, the key thing to know here as well, though, is you're still dropping on the euro to the USD. And I know I may be losing a few people, but the key thing to know here is everyone here basically knows that the euro has been a dominant currency over the dollar. It was about $1.70 equals 1 euro for the longest time. And now look where we're at. You're at $1.02 equals a euro. And you're borderline breaking down that dollar range for the first time in years. The euro broke sub $1. So it was 99 cents equals 1 euro. And you broke that slightly. Now you bounce back up, but you're still right there on the edge of that. Now it looks like you want to get a little upside here on the euro. However, you need to understand that this is a massive level for the euro. And I don't think you're out of the woodworks when it comes to the dollar continuing to rise. And this is why I think you broke a key level for a second. You found support here and you bounced up. And chances are you're going to bounce up here on the euro back to the 105 level. And I know you're wondering, Tyler, you're losing me. You're talking about Forex. What do you mean? This all comes back down to talking about indexes. Because what happens when the dollar gains value? When the dollar gains value, you become a risk-off environment, meaning it's more valuable to hold your dollar because it's gaining value than it is to put it into stocks and other things because your money is just gaining value. Now, when the dollar value starts to drop, which it has been over the past 2 weeks, what's happened? You've been getting massive upside in the market, which indicates a risk-on environment, which means we want to put our dollars into stocks because our stocks are going to grow. That's a traditional fundamental viewpoint of the market. Now, this is what I'm looking at. This is probably where everyone wants to see. What stocks are we looking at for this week? Number one is going to be Microsoft for myself. I still have this trade, and you have broken over a key level. So you had your major supply level kicking in right here, but there was a really big level I was watching as well for us to break, and it was this level right here. It's about 275 to 277 was 2 monthly levels. And from this, you broke above on Friday, and you just continue making these higher lows throughout the day. As you go to the 5-minute chart, you can really see. What I ended up doing was grabbing $90 or 290 calls for next week. They were roughly, I believe, 45 cents when we got into them. They reached highs of 74, 75. They came back down a little bit, but I still see upside happening here. Just a little bit of a retracement. You never broke this trend, and I overall like this position quite a bit. So I do believe there's a lot of upside here on Microsoft, and they're really breaking out of a key level as well. So I believe you're coming to this area of illiquidity, and you have a lot of potential to go up here. Next one is going to be NVIDIA, one of my favorite plays as well. Now, this was our big winner on Friday. I mentioned this one in the Discord, and I mentioned it here on the channel as well. This trade went absolutely crazy. So we mentioned it in Discord. We got in at about 225, 230. Calls and running to 270 within about an hour. And then after that, they went just absolutely. We ended up getting back into this trade after they ran. We cut them again halfway there and then let the rest run. They ended up running over 100%, I believe, on the day. So what a trade we had there. So NVIDIA going absolutely monstrous. And there's going to be another trade that's going to line up with this one as well. But I believe you have room all the way up to about 192, 194. Massive upside potential on the shorter end of the stick where you want to be conservative. 187 is a key level to be watching there as well. So the last one I'm going to mention here is going to be AMD. There's a lot of stocks I can mention here as well. But AMD, Jay Remit ended up grabbing near the beginning of the day $100 calls, I believe, for the 19th or maybe next week. I forget where it was, but he mentioned those in Discord. I ended up missing out on this trade, but it was a great trade nonetheless. And I agree with him. You're breaking through key levels. This is basically the last level of resistance that you have right here. Once you get above this range here, you're essentially golden, and you're going to hit 100 probably within the next hour or two of breaking above $96. That's my opinion, and that's how you're moving. Now, I want to establish and say this. I wouldn't be jumping into calls out of the gate. I'd be waiting for action to establish and making sure you're getting over those key levels. But if you're already in those positions, then you're sitting at a good level right now. But I wouldn't be jumping into positions out of the gate because you don't know if there's going to be breaking news. You don't know if if sellers are going to step in at key levels. You need to watch that. So that's why I'm talking about Nasdaq and all that first, and then setting up into these stock plays as well. And I know it says last play, but the last one I'm going to mention is going to be Amazon. So the big thing here with Amazon, you had lots of trading opportunities too. What I don't like here, and I'm going to be very clear, what I don't like is one, that you do have a gap right there. Don't love that. But also two, is that you did end up breaking back below these higher lows that you were forming. And we really liked what was happening here. However, you did end up breaking back down below. But you're holding that daily, which looks extremely strong. On Amazon, essentially, this is going to be one of your two-way trades going on here. And what I'm going to do is just show you real quick on the 1 hour. So you do have a key level about, I believe, right here. And you're coming all the way back up to this gap that you have roughly at 144. So you need to be watching that. It has not filled, and it probably, and we've been mentioning this on the channel for a few weeks as well, since we touched 102 on Amazon, of coming back to that range. So you still have a lot of levels to cover. You still have a lot of room to go up here on Amazon back to 144. And they just raised all their price targets from every analyst basically on Amazon because they just smashed their earnings. Also, though, you have to recognize you have a pretty steep downtrend and a pretty steep overall gap to that downside. So what am I looking out for? If NQ by some chance comes out and it gets rejected at 13, I'd be looking at something like downside on something like Amazon just because it has that massive level gap. Even if it's to 130, it's still a profitable trade. Now, granted, you come back down to the previous level of 122, that's a very big money making opportunity, but it all comes back down to key levels. And I know people get mad when they come to the channel like, well, Tyler, you're talking about, you can go in two different directions, and you can. But the thing it comes back down to is where the key levels happen. So hypothetically, if I'm saying, this is your key level right here, and this is your key level right here, and I always mention you want to wait for the breakout to get the trade, right? So when you're looking here, this ultimately is the no trade zone when you're inside this range. If you're in the range, it's a no trade. You don't want to trade. You have no clear direction. But if you break down and you retest, this is your entry opportunity on that retest for that downside. And I don't think it's that complex, but I do think we're kind of trained by social media that you follow 3 indicators and you ride it to the moon and you make $1 million, or you're a bust. But ultimately, this is my trading method and how I trade. It's a reactionary type of trading method. You wait till you break, get the retest, and then you make your money back on the upside. Now, if you go straight up, guess what happens? You just don't trade. You don't lose money. You don't trade. You don't make money. It's as simple as that. But I guarantee you there's always opportunities to find on retest. You do not have to just FOMO in and ride things straight up. Very rarely do you get a stock or something that just goes straight up. You're always going to get retest. You're going to get back test. You're going to get those opportunities. So make sure you're patient when it comes to getting these entries, because ultimately that patience is going to save you and having more controlled stop losses as well. I'll see you in the Facebook group. If you're interested in joining the overall Discord, the link for that is down below. We're in there every single day, live chatting, going over trades as well. Have a good one, traders.